This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Welcome back. I'm going to talk about this S&P, give you an update for the market going into Friday morning. So what I wanted to talk about today is that instead of trying to make a big market call or figure out or know in advance, I don't think you have to do that. I think that's the reason why we use multiple time frames. We're coming in on a very key area here, and I'm going to show you how you can go about being on the lookout for what to look for as a reversal takes place, if it takes place. All right, let's go ahead and get into this. First, let me just tell you, if you have any interest in learning about some of these techniques, I would suggest starting with the book. It's at rabilstockresearch.com/book, and you can get more information there. Okay, looking at the market conditions to start, the sentiment did drop a little bit more. Now, I moved it over a little bit inside the negative camp. Now, it's still 42% more bulls than bears, so I wouldn't classify it as neutral or positive or anything like that, but it has dropped from an all-time high of 48% down to 42 over the last 3 weeks. So it is coming off of that level, so we don't need, like typically 35 to 45% is what I would consider to be kind of in that negative camp, too bullish, but because it's dropped off the peak, I'm starting to move its way over. Still categorize it as negative. We have dropped down on the overbought, oversold oscillator. You can see the RSI 5 on the weekly is down to about 34. We're getting closer to the oversold condition. Now, keep in mind, because we've got this rising trend, all right, we don't typically expect an oversold reading. It's kind of rare to get an oversold reading in a long-term uptrend. So most of the time, when you get anything under 50%, it's oversold enough. So you want to keep that in mind. But I did move it into the neutral camp because it's back down under 50. Wouldn't classify it quite as positive yet, but if it gets down under 30%, then you definitely have to classify it that way. Now, the daily, so the momentum, the volatility is still negative on the daily, and the weekly is actually showing some signs of flipping, which is a big deal, and we'll get into that in a second. And the daily momentum has been negative, but now the trend has reversed to neutral, very close to turning negative as well. Still not changing anything on the monthly and weekly yet. All right, let's look at the volatility though. So this is the average true range, and let's just go back and look at this and what's taken place. So we can use this sort of shift in trend where this is shifting back to the upside to say there's a little bit of risk, but then when it works its way back and this starts to shift back down, we know that risk is sort of eliminated, and it stayed that way until we basically started rising again in here. So basically, late February is where it started to really kind of kick in. I mean, we were getting signs that things were shifting. In early February, it got a little bit more pronounced with this breakout. We did pull back, and we actually had a pretty deep pullback here that flipped it back, but it didn't last very long. And generally, the bias has been that the volatility has been increasing on this time frame. So we knew, and what I've been talking about with my subscribers and I've been mentioning on this review is the increased volatility means increased risk, that if we break the 18-day, then we're heading down to the 18-week. Well, that's what this green line is right here. That's what this line is right here. We're filling that part in. Now, look at what's taken place, though, on the weekly. You see how this has grown. This is moving up. The size of this bar alone is probably having an impact. If you look at it, it's the biggest bar we've seen since the starting up bar here. So really, I mean, we're at a stage here where this is getting into a very critical point. If this stays up, if we have another week of high volatility, it's very possible we'll start to see this moving average rising. It doesn't actually shift for me, just like it didn't shift here. Because this line never turned up. So we want to watch that average true range moving average, which is the 18. If the 18 starts to shift to the upside, then we have a lot more risk on this time frame. All right. Right now, we're pulling back into support, and we're starting to show an increase in volatility, but we're getting closer and closer to oversold. Now, I want to make one other point before I move over. When we look at these lines, you can see the separation between these two and then the separation between these two. So that's kind of like room to roam inside of each trend. So this is the daily trend or the short-term trend. This is the weekly trend. All right. So once we break the daily trend, we work our way down to the weekly. Now we're getting very close. In fact, this doesn't show it because it's not exact. It's a 90 MA. It's not exact, but it has actually come down and touched the true 18-week. But notice how we're stretched away from the 18-day. All right, so we've got this opening here where we could actually rally, stay above this for now, rally, and then, fill in this area and then test this line here. And then we either fail there and come back down and break through this line, or we come back and test this line and turn back up. But what we want to do is recognize that there's a possibility of a little bit of a rally. You can see that just based on this opening here. Just like when we got a little too far away here, that we should be on the lookout for some kind of a pullback when the momentum started slowing. If you're enjoying the content, hit that like button and also subscribe. It would help me with the growth of the channel, and I appreciate your support. All right, let's switch over to the different time frames. So we can look at this monthly, and something that I've been alluding to for, maybe in the last month or so is we're up so many months in a row that the likelihood is we should be on the lookout for a pullback, maybe back to the breakout area. Now, I still think that's a possibility, but we got to see what happens at this key level at the 18-week. We're at a very key line, no doubt about it, and we got to see if this wants to hold or not. Now, if it wants to hold, we're only going to see that if we're looking at the smaller time frames, and I'm going to show you how I'd go about doing that. But first thing I want to point out is this drop. Look at the size of this bar. You see how the bars are growing? That's telling you that the momentum is not all that great in this pullback. It's a little too strong to the downside, at least in the short term. And we can see that the MACD has flipped over. It's stretched away from zero, and now we've crossed the signal line. So whenever I see that, I'm sort of expecting an interim rally. If it can bounce, if it can hold, I'm not expecting a turnaround at this point. Like, I don't think we can go and turn things back to the upside right now. I think we could go up and come back down. And then at that point, we could have something a little bit more interesting. Now, the reason why we have to respect this still is because this is still pretty strong. I mean, clearly we're showing signs of contraction with these two lines coming together, and that's what's turned this line down. But it's still up at 45. So there's a lot of strength in the trend. And when there's strength in the trend, we have to respect that, and we have to be on the lookout. This is telling us the timing isn't saying you want to be a buyer right now. We have a little bit of time to sit back and watch. And the likelihood is we aren't going to miss anything. All right. If we go and look at the daily chart, we've been talking about this for a long time, at least over the last 3 weeks. We had lack of confirmation on an ADX basis here. Yes, there's been divergence on the MACD, but as I say, this is a lot more important to me. When the ADX can't confirm, here is the first non-confirmation by not getting back above 25. All right. That happened in late March. So you start to look for signs of a reversal. We get the big red bar, and then we've been watching it a lot more closely since that time. Now, what's taken place here is as I said, we've gotten away from the 18. We're pretty far down. We're down several days. The MACD has come down to the zero line. Now, it's straddling it. This is below and this is above. So we could still bounce off of this. The other thing that I tell you is the red, even though this kind of looks like a harsh decline, the red hasn't really broken out above these green moves here. So we don't have any kind of dynamic move. We're getting the ADX climbing a little bit. And if this does climb above 25 based on the red, then we should expect a longer consolidation phase, all right? And that might lead to a break of the 18-week. It's certainly a possibility. So again, I'm not looking to go diving in. I don't need to, because I know I'm in a critical area. So what am I going to do? This is where I'm going to go use my hourly. I haven't hardly talked about the hourly for a long time. I mentioned it back here because this was kind of the first real signal. We had the potential for some kind of a reversal that came after we started to see the increase in volatility. And so, just something we want to be aware of. All right, so look at what's happening now. We've got this decline in place being confirmed by ADX. All right, I mean, we really haven't had this was the one time we got the sellers got the ADX above 25, and it dipped right back down. And this didn't do it, this didn't do it, this didn't do it. And now we've got a trend strong enough to continue to potentially trend. Okay, so we want to keep watching this. This is going to play out in one of two ways. It's either going to reverse with this not confirming, like we go up and then come back down and make a new low, and this drops down and does not get above 25, right? So we get this exhaustion signal where ADX can't get above 25. That's one way. The other way is we're going to have a reversal signal. Now, this is really important. Typically, I'll say, hey, we want a 1, 2, 3. All right. But in a 1, 2, 3, I've talked about this a lot. If we get a 1, 2, 3 on the hourly, it should mean that we're crossing the 18 on the daily. So I'm going to switch this back. If you notice, if we got a 1, 2, 3, and let me just point this out. If I put this here and I put this here, and we cross back above this to the upside, we are still going to be well below the 18. So when you're going counter trend, meaning this trend is trying to turn around and this one is rolling over, right? We're not in an uptrend. Like if we're getting a pullback in an uptrend, then yeah, all you need is a 1, 2, 3. But when you're switching from being down and oversold, and this trend is kind of rolling over, we need a 1, 2, 3, and then another higher high, another higher low, and another higher high to confirm. And I would be willing to bet you if that happens, that cross here will coincide with the break of the 18-day. All right. Really important distinction. A 1, 2, 3 is presumptive evidence, and we only use that in the direction of the trend. When we're going counter the trend, we have to be a lot more careful and look for more signs. And one of the things we're probably going to want to see is green DI kicking in and holding as price is moving up. We want to see green DI confirm. So that's what we're on the lookout for. Is really, this will be the tell here, is green crossing over, holding above red, holding above 25 while price is turning the corner. If we get that, then we can start to feel better about some kind of a turn from here. Right now, I don't think it's that close. I think it's close to a rally because you can see this divergence developing in the MACD. And, the possibility is with the way this is set up and not a lot of strength here and how far away we are here, that, yeah, we probably should bounce. But the odds are we bounce up and then come back down. All right. And that's what the weekly's telling us. That's what at least the way I'm looking at the hourly is telling us right now. And just the fact that we've had some distribution on the way down, I think it's going to take a little bit more time. If we spend any more time going down without a rally, we're going to have both of these lines cross to the downside. And that means we have to be even more patient if it plays out that way. All right, that's the update for the week. Let me know if you have any questions.